Hey everyone, what's going on in the world of real estate? Well, let's find out. I am Justin Miller, co-founder and principal at the Chong Miller Group. At the Chong Miller Group, we help people buy and sell real estate. We help people build wealth through real estate. Okay, so this is the August 2025 real estate market update for the Las Vegas Valley, where I look at resale single-family homes, condos, and townhomes, and make comparisons against or across those three market segments, where I'm looking at data from the prior month, so July of 2025, and making comparisons back 1 month, so June to July, what happened, how did the market change, as well as over the prior year, July of 2024 through July of 2025, how did the market evolve? The reality is we're below 3%, so inflation's not strong right now. We don't know what it's going to pick up to. It will increase. But I suspect as long as inflation is staying below 3%, we're going to see the Fed being accommodative to try to support the labor market, which means that they will either hold interest rates stable or they'll lower them slightly. Do remember, though, the Fed only controls the federal funds rate, an overnight rate. It does not control the 10-year treasury. It does not control the 30-year mortgage or any of the other interest rates out there in the environment. Those are controlled by bond traders, and bond traders may or may not go along with what the Fed is wanting to do. In other words, the Federal Reserve could say, let's cut interest rates to zero, as some policymakers are suggesting might be a great idea. The bond market might say, oh, wow, this is horribly bad policy. We're going to demand more interest on all of the bonds, causing interest rates to actually go up despite what the Fed is doing. It could work the other way as well, but remember the Fed only has jawboning tools related to most interest rates. They don't control the overall interest rate market. So let's talk more specifically about interest rates just for a minute. We've seen interest rates throughout all of 2024, with the exception of 6 weeks, and all of 2025, being approximately 7%. In July, we saw a continuation where mortgage interest rates remained just below 7%. Now, kind of interestingly, at the very end of July, the Fed had one of its open market committee meetings, and at that meeting, they decided to keep the Fed funds rate stable. The bond market reacted by actually pushing interest rates down just a little bit. And so the first week of August, we saw interest rates coming, 30-year fixed rate mortgage interest rates, coming down to about 6.75, right? So that's a significant but not large drop in mortgage interest rates. It's also probably transitory. We're probably seeing those rates heading back up through the course of the month of August. But at least at the particular moment that I'm recording this, interest rates are down about 15 to 20 basis points, 0.15 to 0.20% from where they had been throughout most of 2024 and most of 2025. So if you're looking to buy and you're paying hyper close attention to interest rates, you could be saving a little bit of money right now on your monthly carry costs if you go ahead and find a property, get into contract, and lock in that interest rate. It's not going to be a lot. It's going to be $20 to $100 per month. That's it, something on that order. But you could save a little bit. So I just want to highlight that to you. All right, so that's the interest rate environment right now. Interest rates have come down just slightly. They're not going to be coming down substantially further, regardless of what the Fed does, because bondholders still want to make returns on their bonds. And as inflation goes higher, even if the Fed pulls down the federal funds rate, bond traders are going to be demanding money on their investments, and that means that we're just not going to be seeing mortgage interest rates coming down. They're going to be remaining pretty flat throughout the remainder of this year. If we do go into a recession around the end of the year, beginning of 2026, We may see that inflation has not increased sufficiently to worry bond traders, and that may cause interest rates to come down around the end of the year somewhat, and we might see therefore less expensive carrying cost on property. Okay, so what's going on specifically with real estate? What's going on with the prices of real estate? Well, as I suggested last month, we're in an environment where we actually have low inventory, regardless of what you hear from all sorts of other places. Inventory is low. And so in a low inventory environment where people actually do want to buy things, but with a high level of interest rates, we have constraints on the market, but those constraints are not things that are just pulling lots of dollars out of the marketplace. So single family housing, we closed July of 2025, resale, remember, resale, not all houses, not including those few new construction houses that make it into the data, but resale single family homes here in the Las Vegas Valley, $476,000. Now, you'll remember this year has been flat at $475 almost the entirety of the year. Last month in June, we went to $479. We popped up $4,000. I had suggested, I don't know if that's going to stick. It may just be an artifact of the relatively low number of transactions. Well, we gave back $3 of the $4,000. We came down to $476. So we're $1,000 above where we've been for most of this year. That means we came down 0.5% on the sale price, the sold price for single family homes at the median here in the Las Vegas Valley. Okay. Now, we're actually up 1.3% year over year, right? So if we go back and look at July of 2024 through July of 2025, we've seen prices go up slowly, 1.3%. So going up approximately 0.1% every month if we just simply average that across time. That's not actually the way in which this has occurred. It's actually been, most of last year was 470, most of this year has been 475. So we're just, we're going up very slowly, approximately flat. Prices are not collapsing, but of course we're not seeing huge gains in prices either. Interest rates are remaining quite high, which means the carry cost on these purchases remains quite high. But it also means that we're not seeing carry costs increasing because pricing is about flat and interest rates are about flat. And that means that the carry cost of purchasing a home today is pretty close to what it was a year ago. So if that's true, we should not be seeing significant deterioration in the number of transactions because the market looks like it did a year ago, right? And a month ago and 3 months ago, and et cetera, et cetera. All right, well, what about condos? Condos, $237,500 at the median at the end of July or through the month of July for 2025. That's down, it's down $2,500 from $240,000 at the in June. It's down 1.0% month over month. We are down 4.4% year over year. So this is starting to get to be significant in the condo space. I'm not worried about it for a variety of reasons. One, condos are a very small portion of the overall market. And two, we've seen significant fluctuation in condo prices. So this looks more to me like an artifact of the small numbers issue in the condo market than it does actual deterioration in pricing. But it's noteworthy, we are down a statistically significant 4.4% year over year. Townhomes, $342,500. That's also down $2,500. It's down 0.7% month over month. Okay. So remember, it's because we're actually a higher base level that even though we decrease the same number of dollars as we did in condos, it's a smaller percentage because it's off a larger number. We're down 1.1% year over year. So again, inconsequential. It's approximately statistically meaningless. So basically flat across the entire 3 segments of the housing complex here in the Las Vegas Valley for resales. We're basically flat year over year. All right, so what about the number of units sold? This is where we've been having some really significant challenge in the market. The market has slowed down. We're seeing fewer transactions taking place, even though prices are flat and interest rates are stable. So therefore, carry cost is approximately the same over the course of the whole past year. We're still seeing transaction volume being even slower than what we saw last year. And remember, 2023, slowest transaction volume in the Las Vegas Valley in a generation. 2024 looked the same. We actually ended up about 2.1% across the course of the year. Well, this year we're weaker. We're looking less than 2023. All right, single family homes, sales volume. 1,837 closed transactions on single family homes. It's up, which is great news. It's up 71 houses or 4% month over month. We're down 5.1% year over year. Now, usually I tell you the monthly numbers are more consequential to pay attention to. The yearly numbers help us deal with seasonality issues. But right now, I do want you to pay attention to this yearly number, this year over year comparison, because again, 2024 was really weak and ended up 2.1% higher than 2023, which was the weakest year in a generation. Well, that means if we come down 2.1% or more, we're running below 2023 numbers. And actually, we've already been incurring months where we're well below those 2024 numbers. So we're looking right now still at the end of July, weaker than we did in the first 7 months of 2023 and 2024. The market's really slow. So we're down I may have said the number wrong. We're down 6.1% year over year for single family home sales. What about condos? Well, condos were up as well, which is great. 269 condos closed, traded hands and closed during the month of July. That's up 38. It's up a really significant 16.4% month over month. But we're down 25.5% year over year, right? These transaction volumes are really weak. There's just no way to cut it. It's great we're up month over month for single family and for condo. Not so for townhomes. Townhomes, 200, we're down from 212. We're down 12 townhomes from what transpired in what sold in June. We're up 1.5%. Okay, so townhomes behaving a little bit differently than condos in the multifamily housing group, but still very weak. Now, pending insights. Single family up slightly. Condos and townhomes flat, like no change, flat. Okay, so the pending insight is transaction volume for August is going to be really weak as well. We're going to continue this trend. The pricing insight was weak in the sense of flat, not weak in the sense of falling, but we're going to continue to see August will probably be at about the same price and will probably be at about the same level of transactions. All right, now next is inventory. And this is really key, and I've been harping on this for the past several months because this insight is really important, and we've got a couple ways to look at inventory. The standard way is just to look at everything in the MLS and say, how much is there? Single family homes for sale, 7,133. That's down. It's down 230 or 3.1% month over month. Now that's significant, right? We're looking at the July data. July for inventory should build, right? Sales numbers in July are a little bit challenging in Las Vegas because of the heat, but sellers should still be coming into the market with some level of certainty going into the months of August and September and October. The next 3 fairly strong months for selling. Well, we didn't get strong seller issues here. We have inventory came down by 3.1% on single family homes. It's also down, it's also up. It's up very strongly from last year, where you'll remember just the past several versions of this video have all shown that we're way higher on inventory than where we were last year. But I want to caution you about what way high means. It doesn't mean that we've got tons of inventory. And we're going to look more at that in just a minute. But we are up 33.2% year over year on inventory for single family homes from the really low numbers that we saw in 2024. Condos, 1,603. We came down on condo inventory as well. We're down 57 or 3.4%, but we're up 33.4% year over year. So the exact same pattern as we see in single family homes. And for townhomes, 1,096, we are down 2 from 1,098 in June. We're down 0.2% month over month, but we're up a very strong 86.7% year over year. Now, 2 insights for you. The first insight is in all 3 market segments, single family, condos, and townhomes, inventory is down sequentially from what was going on in the past year. Now, what do I mean by that? I mean that while we're up by about 1/3 for single family homes and for condos, and up a lot more for townhomes, the month prior, the annual change had been bigger, and the month prior to that, the annual change had been bigger. So in other words, the annual changes that we're seeing are getting smaller and smaller month over month sequentially. So that's interesting, right? That's a deterioration in the growth, the annual growth that we've been seeing in inventory, okay? So second insight, new listings for single family homes and for townhomes flat in July relative to June. Again, we should be building inventory at this time of year, right? Not as strong as we should have been in, say, April and May, but we should still be building inventory, and we're flat. New housing coming into the marketplace, not so much, flat. And we're down for condos. So we've got no replacement inventory relative to what was taking place the month prior coming into this marketplace, right? It's not like there's no inventory coming in, but no new listings, but it's flat. The trend is totally flat. So we're not getting anything that's helping us here on this inventory. And month over month, inventory is down for all 3 submarkets. Now, that's the first way to look at inventory. And when we look at inventory that way, we're looking at it kind of in the way that, the normal way to look at it. We just go into the data set and we look for everything that's listed for sale and we say, oh, it's inventory. But in reality, as you've seen in these videos over the past several months, there's a lot of fake inventory, as I refer to it. And all of the other places where you might be getting news about the housing market are not uncovering this problem. They're just saying, that house for sale and that house for sale, they're equal in the marketplace, and they're not. Some of the houses for sale are totally fake. Well, how do I know that? The median list price at the end of July, and actually let me correct this just so that it's slightly more clear exactly what I'm doing in case somebody wants to go and actually test the data that I'm talking about. Remember, I pull all the data on the 7th of the month from the data set, saying what's in the data set, because not everything gets updated the 1st of the month. We get some revisions, blah, blah, blah. Okay, but all of the data that I pull, except for this next analysis, are as of July 31st, are as of the month. They are of the month, the picture, if you will, of the month prior to the date of the video. So this is the August update. They are of the month of July. And I pull that data on the 7th of August so that the July data is the most complete possible. For this particular analysis, it's hard to pull the data, and it makes it considerably more complex trying to pull it as of a particular date because the data set may evolve. So what I'm doing is I'm actually pulling it as of August 7th. So every month that I do this analysis, it's actually current as of the day that I'm doing the video, okay? So we've got the July picture of the data set, and then this is actually 1 week newer in time. So the number is just slightly divergent. So in other words, the total inventory for single family housing is at the end of July, 7,133. As of the 7th of August, the total inventory is actually 6,486. Okay, so there's a little bit of a difference there. And I just want to point that out to you. That difference doesn't mean anything statistically, and that doesn't even mean that 500 houses of inventory have just suddenly disappeared by waiting that 1 week, but transactions take place at particular times, and so it means that the inventory number on a particular day is going to be different than it is on another particular day. The analysis, though, holds, it coheres, the numbers are correct. All right, so what are the numbers? So what I'm trying to do is I'm trying to disentangle inventory into two sets. Now I'm doing this only with single family resales, okay, just to be clear. But the two sets are real inventory and fake inventory. Fake inventory is stuff that's listed for sale that's fake. It's not going to sell in its current format for a variety of reasons. Now, I can't go and look at like the quality of the houses to make that determination. And let's say that there was a really bad quality house, it still may sell, right? It might be valid inventory for a flipper to buy or something else. So the only way I can do this is on price. So if a house sells, if a median house sells at $476,000, and one was actually in the market to go buy a median house, then the search that that person who's looking for that median house is going to be doing, assuming they're going to be a successful buyer, assuming that they're realistic about what's going on in the market, they're going to be looking for something that's about $476,000. They're going to set their search parameters, and maybe they'll set it from $400,000 to $550,000, or maybe they'll set it from $425,000 to $500,000, or maybe they'll set it from $350,000 to $550,000 because they'd like to be a little on the lower end, but they want a median house, right? So if houses are priced outside of the search parameter, it's not discoverable by a buyer. It's not discoverable even by a buyer's agent, because the buyer's agent, the person helping the buyer find houses, they're going to be using similar kinds of filters, okay, including price filters. So houses that are priced outside of the search parameters that people are going to actually be using, they might be sitting in inventory, but they're fake, right? They're not real because no one's even going to know they're there. So what is the median list price? We know the median sale price, it's $476,000. The median list price at the end of July, at August 7th of 2025, $556,231. So that's $80,000. It's actually $80,231 too high. So if you're looking for that median house, right, that median house is $476,000. 20% of that is just over $90,000. So what, 15% of that is we're looking at numbers that are more than 15% higher than what the median sold price is. So there's a lot of stuff in this so-called inventory that's fake, that's sitting in the data set of for sale homes that's fake. It's not discoverable from people who are actually looking to buy houses, or the agents of people who are actually looking to buy houses. Okay, so it's $80,000 too high. So we can use some statistical tools to actually analyze the difference in the overall inventory and what I refer to as the real inventory to understand how large the real inventory set is. And so we can do that in part by normalizing the list price to the sold price. Well, if we do this, we actually find that there are 4,322 houses currently for sale in the Las Vegas Valley, single family resale. That's all the inventory there is. That's less than 40% of normal. And it also means that 2/3 of the inventory that's sitting out there is real, and 1/3 of the inventory that's sitting out there is fake. Now, if you go back and look at my prior month update, I make a misstatement with regard to the size of those groupings. So don't worry, you don't need to go back and look at that and find the error that I made. It's just a simple math error, but the real numbers are at the end of July, at the 7th of August, we actually have real inventory of 4,332 houses, not 7,133. 1/3 of the total listed inventory is real. I'm sorry, 2/3 is real. 1/3 of the total listed inventory is just fake inventory. And we're sitting at 40% of what should be normal inventory this time of year. We don't have a lot of inventory in the marketplace, right? That's just anyone who's saying, oh, there's so much inventory. Now, a lot of that fake inventory, it's getting price cuts, right? But that's price cut on the list price. It was way too high. Maybe it'll be cut to an appropriate place. Maybe it'll be cut partway to an appropriate place and it's still fake, right? There can be lots of list price cuts, but that's not what's actually taking place in the marketplace, where buyer and seller come together. In the marketplace, prices are flat, up very slightly. Prices are flat. They're not coming down, right? And inventory is small. Real inventory, 40% of normal. And both real and fake inventory came down in July relative to where they were in June. And sequentially, we're seeing decreases in real inventory growth over the past several months from the year prior. So inventory is not super high. It's low. It's low. And people who are thinking and talking about, oh, it's a buyer's market, there's so much inventory out there that sellers are just cutting their prices to try to find buyers, that's not real. Now, is it a seller's market where there's not much inventory and therefore sellers have lots of negotiating power? Well, I don't think that that's actually quite real either, because interest rates remain so high and uncertainty in the macro environment remains so elevated that we see a lot of buyers being very cautious. They're not rushing into transactions. They're thinking, I've got some time, I want to make sure I know what's going on, I don't need to move really quickly. So in some manner, you could say it's kind of a balanced market. It is for properly priced sellers and buyers who really need to be doing transactions. It's balanced in the sense that the prices are staying about stable and transactions are occurring. But right now, we do not in Las Vegas have a healthy market. The market is transacting at very low levels from where it should be, right? Not just from the 2021 levels, which were super high, but even from the 2023, 2024 lowest in a generation levels, slow transaction volume. That's what's marking this environment right now. Okay, one other thing that I give you every month, and that is the back on market numbers. Single family homes in July, 692 contracts failed. That is 27.4% of the market, of the signed contracts for single family homes collapsed, more than a quarter of the market. This is actually an improvement. It doesn't matter because there's no trend, but it's an improvement from the numbers that we saw in June, where we were just about 33%. Interestingly, it's that difference in the number of failed contracts that explains the increased number of closed transactions in August, right? It's not that the market really grew, it's just that there were fewer failures in the single family home space. So kind of disappointing, but it's great that there's an improvement in the number of failed contracts, but it's still a horrendously bad number. It's really bad. And we're not saying trend of improvement. It's really bad. Pay attention to that. Condos, 121 failed. That's 31.0% of condo contracts failed in July of 2025. And townhomes, 98 failed. That's 32.9% of townhome contracts failed in the month of July. Right? 32.9% of all of the times buyers and sellers got together and agreed on a price on a particular property, signed the contract, exchanged earnest money, started moving forward, those contracts failed. This is devastating numbers. Make sure you're paying attention to this. Make sure your agent's paying attention to this. And by the way, please take these insights, share them with your friends, your neighbors, your colleagues, your family members, whomever. Make sure they're aware of these things, and please feel free to forward these videos to them. I would love to be able to help them just as I help you. Make sure that they understand what's going in the market so they can be better consumers of information and better market participants should they decide that it's time for them to sell or to buy. All right. That's it for this video. I'll see you in the next one. I am Justin Miller with the Chong Miller Group. At the Chong Miller Group, we help people buy and sell homes. We help people build wealth through real estate. Thank you.